Look, if you're drawn to trading, I know exactly what pulled you in. It's those hypnotic candlestick charts, right? Green and red, flashing all day, and somewhere in there is that one perfect setup you're going to catch. But here's the thing almost everybody does. They jump straight to strategies and indicators, and they skip the one thing every single strategy is built on. And that's exactly why they stay stuck. Because trying to trade candlestick patterns without knowing what a market actually is, that's like trying to fly a plane without knowing what air is. So in the next few minutes, I'm going to hand you the foundation the pros never skip. Here it is, plain and simple. A market is just a place where buyers and sellers meet and agree on a price. That's really it. Strip away the fancy suits, the complex products, the flashing tickers. You're left with two people shaking hands on a number. It's not a casino where the house sets the odds. It's not some machine built to take your money. It's a venue for agreements. Somebody wants in, somebody wants out, and they meet on a number. Now, here's what we're going to lock in today. 3 things, and once they click, every chart you look at starts making sense. 1. How a trade actually works. 2. What price really is. And 3. Why this is the foundation everything else sits on. Let's get into it. First 1. Every single trade has 2 sides, always. And what makes this interesting is the contrast in motives. Think about it. You've got a buyer who wants in. Maybe he's convinced it's about to take off. Maybe it's straight FOMO. And on the other side, a seller who wants exactly the opposite. Out. Taking profit or cutting a loss before it gets worse. Completely opposite reads on the same asset. And yet, for either of them to get what they want, they're forced to find common ground. They have to agree. No agreement, no trade, period. So real talk. When you click buy, nobody's printing shares for you out of thin air. Someone, somewhere with their own plan and their own money is selling to you. You're always dancing with a partner, even if you never see their face. But knowing there's 2 sides doesn't help you yet. Not until you understand what actually sets the number between them. That's next. So what is price actually? Price is just the last agreement between a buyer and a seller. Lock that line in. It's the most important sentence in this whole lesson. It's not a prediction. It's not some number handed down by an algorithm. It's the footprint left behind by the last 2 people who found common ground. Make it concrete. You're gripping your mouse and the chart's showing exactly 19,842.50. Don't overcomplicate that. That's just the exact number where the last standoff ended. One person wanted in, one wanted out, and that's the penny where they compromised. And the second a new deal happens, boom, that number's gone, replaced by the new agreement. There's even a name for this, price discovery, which is a fancy academic term for what's really a live negotiation, a tug of war. Buyers pull from one side, reaching higher to get filled. Sellers pull back, accepting a little less just to get out. Whoever's more desperate in that exact second, that's who gives ground. That's who blinks first. And here's the part that changes how you see everything. People keep agreeing at new numbers, over and over, thousands of times a second. Connect those agreements and you know what you get? The chart. That line you've been staring at was never magic, and it's just agreements, drawn over time. Real quick, the traders who actually make it all do one thing. They keep a record of every agreement they take part in. That's what Funded View is for. It's a free journal built for this exact journey, and it's linked below. You don't need it today. Just know where it is. All right, back to it. So why am I making such a big deal out of one definition? Because everything you will ever learn in trading sits right on top of it. Charts, a historical record of agreements, liquidity, where the orders are sitting waiting to agree, setups, patterns inside the back and forth, risk, what it costs you when you're on the wrong side of the agreement. And honestly, ask 10 traders to define what a market actually is, and you'll get 10 blank stares. So if you've followed this far, you're already looking at charts more clearly than most people who've been clicking buttons for years. Miss the foundation and all of it is noise. Get it, and it all starts connecting. And here's the whole path we're walking together. Market literacy, that's right here today, then chart literacy, reading the screen, then the language of price, why it actually moves, then reading the whole market, then risk and the funded cross. And finally, from the chart all the way to funded. You've got to be able to walk before you run. You have to understand the negotiation before you can ever predict its outcome. Quick recap: 3 absolute truths. 1. A market is where buyers and sellers agree on a price. 2. Every trade has 2 sides. You can't transact in a vacuum. 3. Price is just the last agreement on the tape. Internalize those 3, and everything else in this series clicks into place. But look, knowing what price is, that's only half the battle. Because here's the question I want you to chew on. If price is just an agreement, what forces one entire side of the market to cave Noiswara, to accept worse and worse prices, sending the chart flying up or down? That question is exactly what we crack open in the next lesson. And it's going to change how you read every chart you ever look at. If this made something click, subscribe so you don't lose the thread. We're going 0 to funded in order. Lesson 2 is right here. And when you start taking real trades, Funded View is where you'll track every single one. It's free and it's linked below. Stay curious, remember your first principles, and I'll see you in the next one.